Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you would like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at Chicago soybeans. The sideways action the market had seen since mid-2018 until mid-2020 had built up enough ammunition for a breakout higher. This it did in August 2020 with a superb monthly key reversal up that closed up over all the moving averages, and perhaps most importantly of all, closed up well up over the key 50% absolute Fibonacci line at 895. All this happening within just 1 month. It was therefore not unusual to see further gains throughout the rest of 2020, and making a big move up in December 2020, closed up over the important 50% Fibonacci line of the 2012 to 2019 move at 1289. This sharp move higher has left a lot of support below, which includes 3 golden crosses in 2020 and a further 2 in 2021. In 2020, we saw golden crosses of the 1-year moving average, currently at 1365, up over the 3-year moving average, currently at 1092. The 1-year moving average up over the 5-year moving average, currently at 1037. And the 2-year moving average, currently 1188, up over the 3-year moving average. In 2021, we saw both the 2 and 3-year moving averages up over the 5-year moving average. Now, I know these are lagging indicators, but with so many it is and has been hard to ignore. In 2021, the market consolidated over the big 50% Fibonacci line at 1289 and punched up through the late 2012 to 2013 base congestion roughly between 1385 to 1460, plus the highs in the 1520 area, before coming to the interesting neckline extension currently at 1586 of the 2010 to 2014 head and shoulders top. Now, I had deliberately highlighted this neckline extension last year. And though it was breached and breached by some distance, there were no closes over it. Rather, we saw a monthly bearish dark cloud cover pattern in May last year. That was the peak of the rise before the market dropped down and halted with a failed key reversal down in November last year. Since then, prices have started once more to move back up. So where does this leave us? Well, the action since the low in 2020 until November 2021 has given us the opportunity to not only draw a bullish Andrews pitchfork, but also a bullish shift pitchfork. Why did I draw the 2 instead of just the 1? Well, it's because the bullish Andrews pitchfork fits, but it is very steep and acute, and I have a suspicion that its angle of attack may not be maintained. Hence, I have drawn a shallower bullish shift pitchfork. Currently, the market is in between the lower tine of the Andrews below, currently at 1254, and the middle tine of the shift above, currently 1522. One other idea I'd like to, let's say, provisionally float by you. It is way too early on this, but it should be worth considering. Is to look at the whole of the 2020 to date actions of possible bullish halfway hesitation. In which case we might, I say might, with real due deference here, we might have a possible target X topside in the 2025 area. I'll just repeat that, in the 2025 area. This is way up off the top of my long-term chart, and it might sound ridiculous now. Indeed, it does sound ridiculous. But it's what I see. And I'd rather say it and maybe look ludicrous and even laughable now than be silent and be confirmed as an idiot who should have said something should it come about. Anyway, this is a multi-month and likely a multi-year potential target X. So there ought to be plenty of time, plus it will all depend on what the market does when and if it meets the 2021 high at 1667, the 2012 high at 1789, and also the downtrend between them both, currently at 1657.